This is the briefing for Thursday, June 18th. I think I talked about it in last night's briefing at the beginning. I'm going to do it again. I get calls periodically through the day and from clients that are questioning me on my thoughts on the market. And basically, I don't like this market. I'm not thrilled about the internals, although they strengthened slightly in today's trading. There was a lot of volatility in terms of the indices themselves. And I say volatility is really basically an up and down movement. You can see here, these are the hourly charts of the spiders, the Qs, and the IWM. And you can see this is today's trading right through here. And you can see it's just a lot of up and down movement, really just kind of a pause phase, a little bit different in the NASDAQ or the Qs. You can see we had a little bit of a move higher. And the real volatility came in the IWM. I was trying to trade it earlier this morning, and this first hour of trading was really pretty brutal in terms of the up and down movement that it created. So I just closed my position and sat on my hands for the rest of the day, wondering if we were going to see some type of uh, uh, good move in one direction or the other. But today is the last day, trading day of the week and the last trading day of the month for the June 18th monthly option expirations. So we had that probably had to do something with the volatility that we saw. And again, this really wasn't volatile. It was just a pause, and the market seemed unsure of whether it was going to go higher or lower. Now, this is the spiders on a daily basis, and you can see we haven't quite reached this 760 level here, which was the all-time high. Volume ticked down slightly, really nothing to write home about in terms of volume. 52-week highs minus 52-week lows fell, and in fact, a little earlier, just before the close, that was a negative number, not a positive number. Positive 9 shares, 52-week highs minus 52-week lows. Breadth in the NYSE, only 773 shares positive, and you can see that net volume is really declining based on where we are. But this is an inside day on the spiders, and that's a day where the high and low are within the range of the previous day's high and low, and it really not a whole lot of movement here in terms of that. Typically, when you get a breakout of an inside day like that, I've found that a breakout of the high or the low will give a test of the previous day's high or low, and that usually leads to a breakout of that day's range as well. So something to watch out for in the next week or on Monday. Once again, markets close tomorrow for celebration, I guess, of Juneteenth. So there will not be any trading tomorrow, and it'd be kind of nice to take a day off and analyze the markets in a little bit deeper perspective. This is the Qs on a daily basis, and you can see we didn't have an inside day today. We exceeded the range of the previous day and getting pretty close to this upper extreme right at the 746, 747 area. That's going to be interesting, and I pointed out last night that right now you could classify this as a double top, but it's not a double top until we see some type of a turn down. And we haven't seen that. Volume just extremely low, but this is the last trading day before a 3-day holiday, so it's going to be that can be typical. 1,258 shares positive in the NASDAQ bread, and net volume recovered fairly nicely. So a little bit of strength in the market internals, especially in the NASDAQ. Russell, that's where the real volatility was, as I showed you on the hourly charts. And you can see we're trading just above this high right through here, comes in at 293 area. So it's going to be interesting to see. That's going to be important support because we trade much below that. You can see we did that in today's trading, but buyers stepped in and drove price higher. They tried to take it even higher than that, but sellers stepped in and drove price back down again. 945 positive in breadth, volume down, but net volume up in the Russell. So some positive news in terms of the market internals, but just really not a whole lot of structure to price development in terms of the continuation of the rally trend or the continuation of the contrary reduction the rotation that we saw right here, the counter trend rotation that we saw right through here, and you can see it. And I'm still, again, I'm wondering whether this is a one step, two step, and a three step is yet to come, but that's yet to be seen. But still, for a market that is reaching its all-time highs and potentially going to trade through it, this just is not a strong market from an internal perspective. I want to bring up, I do this typically on Fridays, but since today's the last trading day, this is the percentage of stocks above the 20 and 50-day moving average. So you can see it turned down in the S&P 500. In terms of the 20-day moving average, got a little bit of a tick up in terms of the 50-day moving average. But you can see it from where we are here in terms of where the 20-day moving average is, and you can see where price is right here, whereas before you can see where it was, where the 20-day moving average was, and you can see where price was. So you can see really pretty big divergence there. Same thing with the 50-day moving average. And in terms of the NASDAQ, the 20% of stocks above the 20-day moving average, ticking up slightly today. Same thing with the percentage of stocks above the 50-day moving average. And then, of course, with the Russell, we've got the same thing, a little bit of a tick up. But still, there's a pretty big divergence in these indices, the percentage of stocks above their 20 and 50-day moving averages compared to the past rallies that we've seen in the indices. So Monday is going to be an interesting day. I said that yesterday I said that the most important time frame in today's trading was going to be the first hour of trading, and you can see that it was, and then the last hour of trading, which didn't give us a whole lot of perspective as to whether we were going higher or lower come Monday. Same thing with the Qs, and the same thing with the IWM. So it's going to be interesting to see how we kick off the week. Now, next week is the last week before the July 4th week. So it would not surprise me, especially towards the end of the week, to see volume falling off a little bit more as we go into the end of the week. But once again, and this is just a cautionary feeling that I have about my long positions. And trade management and stop management is to be sure that this rally from an internal perspective is just not as strong as it should be, as the market is attempting to make new all-time highs. Have a great long weekend, and I will pick this back up again on Monday.